Hi guys, I want to talk to you today about how do you keep track of your inventory for tax purposes. I've been seeing a lot on Facebook and Instagrams where a lot of people like to itemize and write down every single thing they purchased, then what it sold for, what the shipping and fees were. That is definitely not the wrong way to do it, but I like to simplify everything. When I first started doing eBay, I feel like I was doing a little bit of everything, and then at the end of the day, look at everything I have accomplished, and it really didn't look like much, and it was just getting me frustrated instead of motivated. So I made a journal for a few days, and I basically wrote out everything I did. And then I took a bunch of highlighters and I highlighted everything that actually produces revenue, like listing, shipping, and I highlighted that in green for money. And then I highlighted things that kept up the business, like going sourcing, doing bookkeeping. That was yellow. Everything family related, eating, sleeping was blue, and everything else was red. And let me tell you, you should not have any red in your little notebook. If you do, cut that out. That's called time wasting. And we're here to be productive, to actually work, because at the end of the day, you're only hurting yourself. You're not proving anything to anybody. You are in charge of your financial wealth. Well, a lot of my red was Facebooking, Instagramming, which I'm actually doing a lot now. But that's because I need coworkers and I want to communicate with everybody. However, red really is not necessarily in your journals. You need to find a way to get that to the minimum. Set yourself some time limits and, get that to a few hours a day, and that's it. But I had a lot of yellow in my notebook and not very much green. No wonder I wasn't getting the results I wanted. And so I started thinking of how can I simplify all those things that we have to do to keep our business going, but not necessarily going to make money for us. And one of the things was bookkeeping. There's just a lot, when you write everything down, everything you purchase line by line. And don't get me wrong, I'm all about cutesy patootsy little planners with funky stickers that we like to plaster all over. I am addicted to them. Every time I go to Michael's or TJ Maxx, I bring like 4 back, and I have a whole shelf of them that I'll never use, but it makes me feel good just to know that they're there. I'm all for it. And if you're one of those people who like to organize things to death and move things around just because you think you're gonna work better, that's all great. But at the end of the day, it doesn't matter how many stickers you got in your little planner. You didn't make any money. And so if all of that could be cut out and you could just stick to simple principles of what needs to be done and focus the rest of your energy on listing and actually making money, at the end you would be much more happier because you will have way better results. So today I want to cover what IRS actually will accept as far as your inventory bookkeeping. I got a lot of messages from you guys that I should put a disclaimer and tell you that you need to contact your local CPA and all that good stuff. So to get that out of the way, this is my opinion only. I'm sharing with you what I personally do. I'm also telling you that I have researched this. This is with accordance and guidance of IRS. When you go thrifting, let's say bins, and you have brought home 100 pounds worth of stuff, IRS really doesn't care if you're gonna put in there Lululemon tank top, paid 25 cents, sold it for $42, or your next line will be a pair of jeans, paid $1, sold for $18. At the end of the day, IRS sees that you sold everything for $60 for that day. They want to see what your cost of goods were, where your deductions were, and how much is their cut. That's all they really care about. There's a couple ways you can record inventory. I want to talk about first in, first out system and last in, first out system. I personally use first in, first out because my price for inventory are pretty consistent. I pay about same thing over and over and over. Now, if your price of inventory increases as time goes on, so especially for people who do wholesale, if you negotiated that you're paying $500 a pallet and you paid this year $500 a pallet, or first 6 months $500 a pallet, and then the next half of the year they increase the price and all of a sudden you pay $800 a pallet. And so basically, if your inventory gradually goes up, you probably want to do last in, first out, because that way you can balance your taxes and you will be able to subtract more cost. But for us, people who shop at the bins, who source from thrift stores, we really should do first in, first out system. And I want to show you this awesome little notebook. I'm going to put in the description box. Amazon sells them, eBay sells them, Office Depot sells them. I'll put a link. I'm not affiliated to any links that are in the description box. If you feel like, click on them. If you don't. I just want to do it for your reference. But this is the book. There is an online version of this book. I'm also going to put it in the description box. I personally like the online version of it, but I had this book from a while back, because I've been doing this for about 8 years, so I dug it out. This is the monthly bookkeeping. They also make weekly bookkeeping, and you could do whichever one is easiest for you, but that's from Adam's Financial Records. And once you learn to do it this way, you could also do this in any electronic format that you want. Like I said, I will put a link below to this exact same book, only in electronic format. But I sometimes like to take a pen and paper and make that work. However, electronic format, it will do all the math for you, so you don't have to sit there and add stuff up. I also have modified it a little bit. Let me open it up. Look, that's really all the accounting for your inventory that you need to do. You don't have to sit there for hours and hours and hours and write a bunch of stuff. The hour you're gonna sit there and log all your things is an hour you could have been listing. It's an hour you could have been sourcing. It's an hour you could have been shipping. So as far as IRS concerned, this is perfectly acceptable. It takes me 20 minutes at the most once a week to log in all my totals. And today we're really talking only about, keeping track of your inventory. And also, when you're going to go to your accountant, unless you do it yourself, they will ask you what inventory method you use, and you could tell them first in, first out. It's also called FIFO. At the end of the day, IRS really doesn't care how many pairs of shoes you sold, or how many pairs of tops you sold, or who made those tops that you sold. At the end of the day, all they care about is how much money you made and how much of it is their cut. Really, it's that simple. Okay, let's take a look at this page. So when you bring inventory home from, let's say you went to Goodwill Outlet or just a Goodwill store or any thrift store, this side I will record what I have brought home, and then we're gonna do our first in, first out here, and on this side we're gonna record what we sold. I do it every 7 days. So I literally put the date, the amount of items I brought, how much each item cost me. So if I brought, like say 100 pounds, I will then just sit down and count them all out, and I will see how many items I actually brought home, not the pounds. So I would put that I brought 106 items, they came out to be 52 cents an item, because I will take the total divided by how many items I have, and I will get how much it cost me. I put GO for Goodwill Outlet, and then I just put a zip code of where it is. I also keep all the receipts. I take a Ziploc bag and I put all the receipts in there, and I put what month it is. So for every year, I have 12 Ziploc bags. And that's really all you need to record. Again, date, how many items you brought, how much each item cost, where did you get it, and how much you spent. And if you do garage sales, whatever you buy your inventory, that's really all you need to do. IRS would like to see a written record. So you have put your inventory. You don't need to put in, that you bought 2 pairs of pants, 8 pairs of shoes, 5 pairs of blouses. They really don't care about that. That's strictly for your own satisfaction. IRS just cares about total numbers at the end of the month, or for them actually at the end of the year. So on this side, you strictly recorded what came into your house that month. Then on this side, I do it once a week. So like every 7th day, I will record how many items I sold and what the gross amount of sales were. And so I will do it throughout the day. If there is a few days left over at the end of the month, I will just, to finish up the month, like this only had 3 days left, so I put what 3 days is. So at the end of this month, I have sold 251 items, and this is the gross amount I made. If you have any returns, you can subtract them on the next line. See, it says less returns. On this little part, I basically put in, maybe we should go here. So we sold 251 items right here. So first in, first out. First we brought home 106 items. So we take 106 items that we brought home minus 106 that we sold. We balanced it out to 0. Next line we brought 52 items and 52 we sold. It goes into 0. And you go down the line until you reach this number, 251. So on the last line, we brought home 104 items, but we only sold 43. So that became 61. And then the rest, we haven't even touched yet this month because we haven't sold it. So you just carry them over, and basically what you have left in your house for this month is 196 items. You can also total amount right here, and you can have your number, and then you subtract the number of items you sold. Now, because it's first in, first out, the way you would find out how much you spent for inventory, so you would take 106 times 52, those numbers are already done for you. This number, however, you only sold 43 out of that 104, so you would have to figure out, you would take 43 times 48 cents, figure out how much your inventory is. And that number, this number, after you know how much you spent, gets transferred over here. Now, if you do this in electronic format, it will do that math for you, so you wouldn't really even have to add stuff up with a calculator. But I mean, literally, you have like, 1, 2, 3, 4, 5 lines to add. It's really not that complicated. So then on here, you have cost of your inventory plus the shipping for the day, and plus your eBay and PayPal fees. Now, I wanted to show you where to get those numbers in PayPal. However, because my PayPal is linked to more than one account, when I went to get a report, it told me I need to wait 24 hours. I'm like, I really need to record the video. I don't have 24 hours. So, probably next video I'll make about PayPal reporting, just so you see that you don't really have to keep track of those numbers. They're all in existence in different platforms, and you could just go and pull them out. But your cost of goods will always be how much you spent for inventory, what you spent for shipping, what you spent for fees. Inventory adjustment will be if you decided to donate something that month. You will also add that amount to this blank line. And freight, if you bought inventory wholesale and it costs you shipping, that also goes in there. And then the total amount, your cost of goods, like for me it came out to $1,772.52. So then on here would be how much you sold minus returns. We didn't have any returns. Minus what it actually cost us for inventory. And we have $1,189.13. That's it. That's all you really do. I will also make a video where we actually talk about expenses that we also need to subtract. And then we'll have the final number from which IRS will tax us. So there's really not that much to do. You bring your inventory home, you put it in here. All you need to do is date, how many pieces, what it cost per piece, an average, where you got it from, total. Then you keep track of how many you sold. You could do it daily if you want, but I just feel who has that kind of time. If you did it once a week, that's fine too. You have your numbers. Then you figured out your cost of goods. Remember, first inventory that you brought home, that's the first inventory that we're gonna take out of our system. You figured out your cost that got moved over here, along with shipping that you spent to ship it to a customer, along with eBay and PayPal fees. If you have anything to damage out or redonate, it will go in here. And if you have anything for freight, for the items to get to you, it would go in here. Your total number, what you made, minus what it cost you. Boom. Your gross profit is right here. Subtract expenses. That will be next video. And you got your number. And honestly, this is all you really need to do. It should not take you more than half an hour to keep your books. I don't care how much you sell. eBay already keeps totals for you. PayPal keeps a lot of those totals for you. You literally have to go open up a report, pull out a number, throw it in your books, get us the plug back for all your receipts for that month, and call it a day. This is your record keeping, and the rest of the time, what should you be doing? That's right, you should list. Like seriously, after this video, go list something. One thing I want to mention is that purchase of inventory is not considered a deduction by IRS until you have sold that inventory. So, or it's deemed worthless and you have donated it. So it really doesn't give you any benefit to have gazillion piles of inventory sitting at home, because you really can't count it as a deduction until you have sold it. For this particular video, we're not going to actually touch on how to deduct inventory and taxes. We will have a separate video on that. Today we're only talking about how we are recording the inventory, so at the end of the year we can make sense of what we actually brought in, what we actually sold, and that it is IRS acceptable. I wish you guys super profitable week. Keep at it. Follow me on Instagram. Join Facebook group if you haven't done so. If you guys found this video helpful, leave me a comment, let me know. I always welcome feedback. Give it a thumbs up. And I will see you guys later. Bye.